partial credit guarantee scheme. So this scheme was announced by Finance Minister in July 2019 in her budget speech for financial year 2019-20, and then this scheme was implemented in August 2019. So basically this scheme was announced to handle the liquidity crisis and cash flow mismatch which is being faced by NBFCs and HFCs, so that sound NBFCs and HFCs can continue to get bank funding from banks and then further enhance the credit flow to small businesses and consumers and help in the growth of the economy. So in this scheme, Government of India will provide one-time guarantee for the pool of assets, and these pool of assets can be purchased by public sector banks from housing finance companies and HFCs, and this guarantee will be valid for 24 months. And NBFCs and HFCs, they have to pay a fee of 0.25% per annum of the assets that are being purchased to Government of India in lieu of the guarantee. This guarantee can be invoked by banks on the default of loan for the principal or the interest amount if this amount is due for more than 90 days. And overall guarantee, however, is limited to first loss of up to 10% of fair value of assets being purchased by banks under the scheme, or rupees 10,000 crore, whichever is lower. But Government of India will settle such claims raised by public sector banks within 5 working days. The assets which is being purchased by banks should be rated by credit rating agencies, and earlier the requirement of the rating was AA, but now the government has announced that it should have minimum rating of BBB plus or higher. So all assets which have been originated up to 31st March 2019 are only eligible under the scheme, and NBFCs and HFCs can sell max 20% of their assets subject to a cap of rupees 5,000 crore at fair value, and there is a cap on the individual asset which is being purchased under the pool, that is rupees 5 crores. So no individual asset should be having the value of more than 5 crores. Then non-performing assets should not be more than 6% as on 31st March 2019, and these NBFCs, HFCs should have made a net profit in at least one of the last 2 preceding financial years, that is 2017-18 or 2018-19. And there are other few clarifications here, like minimum holding period and minimum retention requirements are not applicable to the transactions under this scheme. However, it depends on bank, they might ask for some margin requirement. Then originating NBFCs and HFCs can repurchase the assets after a period of 12 months on a right of first refusal basis. So although this was launched in August 2019 and is now almost 5 months, but still the scheme is not that successful as government has thought about it, because there are many questions that are still unanswered. For example, the guarantee covers the risk of default for only the first 2 years, but the tenor of the loan is 3 to 5 years in case of NBFCs, and in case of HFCs it is more than 10 years. Then why this scheme is restricted to just the public sector banks, leaving private and multinational banks outside of it? The success of the program is also being questioned, given that some of the provisions of the plan run contrary to the Reserve Bank of India's regulations governing securitization and sale of NBFC assets, especially regarding rating requirement and loan origination period. The risk weight applicable on loan pools acquired by a PSB under this scheme is also not clear, since even though the acquired assets carry a government guarantee, the same is partial and covers only a part of the tenure of the assets. Many banks are in the PCA, prompt corrective actions, and are not willing to purchase the assets under the schemes. Then cost effectiveness for NBFCs is another important aspect for the success of the scheme. So I think all these issues need to be taken care of if we want to increase the success of the scheme. However, I would say that this is a very good initiative taken by Government of India, and it will definitely help to handle the liquidity crisis that is being faced by NBFCs and HFCs. And in long run, maybe we will see that this will increase the this will boost the economy of India, and it will increase the flow of fund to the small businessmen and consumers in the long run. In case you have any query regarding this scheme, you can contact me on my email ID rekha.kedia@resurgentindia.com.